Hello chaps, welcome to Bar Snacks. This is the channel all about economics, business, finance, politics and policy. And today we'll have a little bit of a roundup of the latest big financial news, and we'll look forward into 2019 and see what is coming up in terms of the economy. Today we're going to talk about the condition of the global economy, also going to round up what has happened lately in Brexit and the Huawei case, and then I'll also talk about Apple, the Johnson & Johnson asbestos scandal, and we'll have a little look forward into 2019. Anyway, let's get into it. So the global markets have suffered recently. The trade war has really put a damper on growth. We've got the slowest retail growth that we've seen in China for 15 years. This was a big story this week. It's mainly due to weak consumer spending and really slow construction in China. But the big Sino-US trade war has dampened markets globally. The Nikkei fell 2% on the last day of trading this week, and the S&P 500 is now down on the year after a big slide. There was a large disappointment in the Eurozone this week, which has stoked uncertainty around the world. European Central Bank President Mario Draghi came out to say that he would downgrade expected targets for Eurozone growth next year. In addition, Trump may slap 20 to 25%, something about the tariff on EU cars as he looks to boost the US car industry. Also, the ECB have ended their quantitative easing program. They've decided that it served its purpose well, that ending instability and volatility after the global financial crisis is now done with that, but also that may lead to more clogged financial channels within the Eurozone. And the probability of a hard Brexit, as Theresa May's plan was deferred, the vote on it, to buy herself a bit more time, but will probably be shot down in the House of Commons. All right, let's get into a roundup of the Brexit events in detail. So Theresa May has her plan. There was a vote of no confidence, which she managed to survive with a majority. She realises that what she has, her deal for Brexit that she's negotiated long and hard over the recent months, is probably just going to be straight shot down by the House of Commons. What she's trying to do is she's trying to just buy herself as much time as possible. So the vote was going to be last Tuesday, and now it's been deferred to, at the latest, January 21st. She's going to try and use this time to negotiate a little bit more and try and get as much value as possible out of the Brexit deal. But Jean-Claude Juncker, who is head of the European Commission, has already said that he's going to refuse to budge on anything substantial that Theresa May might demand. The only possible thing I could see her maybe getting was just some assurances or something like that on the backstop hard border in Northern Ireland, which we are still unsure of the details. And because the plan is so likely to be shot down, we now face a very real possibility of a second referendum. And I think that a second referendum could potentially be disastrous, or could solve it for us, depending on the outcome. Now, myself, I've always been on the Remain side of things, but a second referendum in which Leave comes out again and the plan has been shot down in Commons, we're looking at a very real possibility of a no-deal Brexit here, and I think that may have disastrous consequences for our economy and possible recession, I think. But I do see a way out of this. Recently, the European Court of Justice ruled that Britain could withdraw Article 50, which is the article they activated in order to leave the EU and begin Brexit. They could withdraw that without any consent from any other member state. So there's no need for a vote in Europe about the withdrawal of it. We could just withdraw it without any notice. Ultimately, this is what I think should be done. There should be a second referendum. We should have different possibilities negotiated with the EU. So we could have a hard Brexit, just no deal, as one option. Hard Brexit, a Norway-style soft-ish Brexit. We can have what's already been negotiated, as an option, and we can also have remain as an option. And this could be a ballot. We could send that out as a referendum. And I think in order for remain to win, I think the bar should be set at 50% for remain. If 50% or more people vote to remain within the EU, we immediately withdraw Article 50 and the whole fiasco is over. Obviously, there still will be a bit of fallout from all that time we wasted. But I think that would be the go-ahead. And then one of the plans, if Remain did not have a majority, the plan with the most votes out of the three would be selected as the ideal option. Okay, moving on now to Huawei. And it's been big recently. The FT ran an article on the founder of Huawei this weekend, who's Ren Zhengfei. And the whole fiasco unloaded like this. Meng Wanzhou, who's Huawei's founder's daughter and Huawei's chief financial officer, was detained in Canada. And basically, the reason she was detained was for alleged bank fraud in managing transactions from Iran to China on the sale of US telecommunications equipment from Huawei to Iran, which infringed US sanctions, and that's why they detained her. She was detained in Vancouver, Canada last week. And then I don't want to say in retaliation, because it's not really certain whether the two things are connected, but 2 Canadian nationals were detained in Beijing, apparently posing some threat to the security of the state. And this is convenient timing for Beijing, I think. And they were, for a while, lost in the Chinese system. Breaking news it just came out on the FT just now. Michael Kovrig was allowed to be seen by Canada's ambassador to China, and now Michael Spavor, who is the other Canadian who was detained, has now been allowed to meet with Canada's ambassador to China. So the 2 men are okay. However, Huawei is still being investigated by the US, and HSBC, who is allegedly involved in this kind of transaction between Tehran and Beijing, is currently not being investigated for its role. Apple. I've got 2 things to say about Apple. Firstly, big story this weekend. There's been a battle between Apple and Qualcomm, who are an American semiconductor telecommunications manufacturer, in China, specifically relating to 2 Chinese patents which were filed by Qualcomm already about their touchscreen technology, something about it, that Apple's iOS operating system allegedly infringes on. So what Qualcomm are trying to do now is, because they say your software is infringing on our patents, you can't sell phones with that software now. And this affects 7 models in the iPhone range, from the 6S all the way through to the X, that are currently being sold in China. This will affect them if it comes into play. Apple are still selling the phones as of right now, but they say that they will release an iOS update which will not infringe on the patents anymore. That hasn't come out as of yet, but Qualcomm are still trying to block the models from sale. Obviously, this would be a huge blow to Apple, who have already stopped reporting unit sales for their iPhones. Their upcoming unit sales for iPhones are not going to be public anymore, obviously because they're going to sell less of them. If you're selling more, you're not going to keep how many you're selling secret if it's larger than it was before, but the world has reached peak iPhone, and this is worrying for Apple, because looking beyond the iPhone, they don't have much in comparison to how big the iPhone is. All their other products, the MacBooks, the iPads, they're not, in comparison to the iPhone, they're just not big enough to sustain Apple as this huge corporation. So this is problematic for Apple. And this was shown well as Microsoft briefly overtook Apple in market cap recently, and they've been trading places ever since the 26th of November. Microsoft really thought it was a down and out, a dinosaur of the technology world, but no, it's come back and it's strong after Apple stopped reporting unit sales and all this trouble that they've been going through in China, a lot of uncertainty has developed in Apple, and unlike Apple, Microsoft, who runs the cloud and their OS and things like that, they have huge revenues from massive companies that are guaranteed because those companies rely so heavily on their products. Apple don't have this. Apple don't supply to massive companies like Microsoft does with their cloud and Office products. Off the back of that, Microsoft are getting a lot more shareholder value and certainty in their stock, which explains why it's been going up. It overtook Google, or Alphabet, I should say, Amazon, and then briefly Apple in the past year. So very well done by Microsoft. Okay, now the Johnson & Johnson asbestos scandal. This is a pretty crazy one. Johnson & Johnson, manufacturer of hygiene products, care products, that kind of thing. Since 1971, there is known that there have been traces of asbestos in some tests for their talcum powder. Reuters published an article the other day talking about the asbestos in Johnson & Johnson talcum powder, and Johnson & Johnson has really reeled off the back of it. And the crazy thing is, this isn't even something new. This has been known about for a few years now, but just Reuters bringing it to attention has really caused the J&J stock to slide. In one day, it was down 12% at its lowest. It popped back up, and I believe the figure is now at a 10.24% decline in value of J&J stock. This wipes 42.4 billion off the value of the company just like that. It's now down to 354.3 billion in market valuation. I think this is a good thing. I think it shows how powerful the market can be on unethical kind of business like this. Knowing about asbestos in your talcum powder since 1971 and still not fixing it all the way up through 2010, which is where we still have data, rightly so, you should be punished by this, and this is what the markets have done. All right, now, lastly, we'll look forward to 2019. What do we have coming up? So, 2019, at least the beginning, I'm dubbing it the year of uncertainty. We don't have much of a clue what's going to transpire in the financial world in 2019. We'll start by talking about the Fed interest rate rises. Originally, the first rise was scheduled for December, which is this month. That was obviously brought very much forward into October, and a red-hot US market was sent reeling by an early, kind of unexpected rate rise there. I'm not going to criticize the Fed for their decision. Looking back in the future, this might be a good move, but what it does is it raises a lot of uncertainty, because the first one was we were going to get this month, and instead we got it 2 months early. And so upcoming planned ones may also be pushed forward again. There is talk in the press about another rate rise, either later this month or in January. The talk of the town is that it may come sooner rather than later, though, as US growth, which has been quite robust recently, has diverged from the global economy, which has a bit of a colder climate currently. Also, the future of the US-China trade war in 2019. There was a historic meeting between the two leaders of the countries in which they agreed on some various terms, a kind of half ceasefire, if you will. There were extra tariffs that Trump was threatening to slap on Chinese imports starting on the 1st of January 2019. That were agreed to be deferred until April of 2019. And both the US and China released statements about what they're going to do, updating their trade policy for the next year. However, the two had differing statements. This is a cause for concern, definitely. If there's some lack of clarity there between the two leaders on what changes they're going to make exactly to their trade policy, that might further escalate tensions between the two, and an all-out trade war may ensue. There also has been a flattening yield curve recently. The yield curve, obviously, a very good indicator of future financial fortune. When it inverts, it's very likely a recession is coming. Hasn't inverted, but it is flattening, which could be signs of a recession and a global financial cool down. Investors are trying to lock in their money due to the huge amount of uncertainty in the world today, and subsequently longer term yields have been going down. All right, that is all the news for now. I've been Bar Snacks. Have a good one. Merry Christmas.